Good day in terms of, boy, the weather's fantastic. Although it's a little more humid maybe than I'd like. But you don't really want a weather report out of me. You want 3 at 3. So let's get down to it right now, shall we? 3 at 3 presented every business day at 3 p.m. Eastern Time. I am Jon Najarian. I'm going to give you and all the Robin Hooders out there, the hoodsters, some stocks to watch. And if you decide to trade any of them, please be aware of our disclaimer, which is that this is for educational purposes and informational purposes only. We are not trying to be your investment advisor. I'm a trader. All right, let's get down to it. GLD. Wow. Some very serious paper in this one, my friends. GLD is the gold ETF, as you know. We've seen a lot of paper in this name over the past few, I'd say the last week to 10 days, people have been building up pretty sizable positions in here. And as they build those positions up, we have profited from time to time on a trade that they might disclose by virtue of they bought a bunch of calls or they bought a bunch of puts, because they trade both ways in this one. And they trade pretty big size, as you can see on your screen right here, because GLD, and let me give you an idea of how big this is so far today. GLD, August 170s, those were the strike that they were trading with the stock just over 166 bucks a share. Again, these are the August, which is the 17th of August expiration. And at that 170 strike, looks like, is that right? August, whoops, I hit the wrong one. August 21st is the expiration. And the August 21st at the 170 strike, volume now 11,600. So another 1,600 of these calls have changed hands. 10,000 of them, that's 1 million share equivalent. So they've already traded a million share equivalent for $3 a piece. So this is a $3 million trade, folks. $3 million committed to the precious metal ETF, GLD. And they put it into a spread, which shows you that these are pretty smart folks, because that's the way I like to trade as well. Why would they do a spread? Well, because of V and T. V is Vega, that is volatility, and T is theta, that is time. And even though these are approximately 2 months into the future, you're still going to have time decay. It starts to more rapidly accelerate right here at this time. In other words, right at that 60-day mark, that's when we really start accelerating on the time decay. And of course, it's most rapid in the final couple weeks. These are further out than that, but nonetheless, time will affect these. Also, volatility compression. So in other words, if you took the volatility down, these calls would be worth less. As Warren Buffett would say, not worthless, but worth less money. So you could address that perhaps by doing that spread. You own the right to take it from somebody at 170. You've given somebody else the right to take it from you at 180. And for that, selling that 180, you've collected $1. So in other words, you've put on a 10-point spread for $2 instead of owning the 170 calls naked for $3. So that's what you need to know about this. Little quick lesson there. Here's a graph. As I say, we had that nice trade going in from March to April when the gold just broke down with every other asset class. And since then, it's been like whoop, 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 whoop. And we're trading up near the highs right now, 166.39 for gold ETF. All right, let's get to the second of our 3 at 3. That second trade right after this. If you want to get started in options trading and you've never done it before, don't just spin your wheels. Don't just jump into the market and lose money. Learn how to do it. We can show you. marketrebellion.com/get started. You can learn about stock, options, futures, cryptocurrencies, all at marketrebellion.com. And if you type in marketrebellion.com/get started, you can see exactly what we're talking about. Let's take a look at Bed Bath & Beyond. Why? Well, because we stuck them in there last week, and maybe it's time to stick them again. At least that's what some folks are thinking. How do I know that? Because, again, another million share trade. Some of you who are new to options. How do I know it's a million share trade? It's 10,000 options. Every option contract is for 100 shares of stock. So when we see 10,000 option contracts, we know that that means 1 million share equivalent. So they were buying at the money calls with the BBBY, Bed Bath & Beyond, at 11. They are buying the 11 strike calls, paid $1.27 for those. They traded more than the open interest. So we know at least about 4,000 of these calls are opening new trades. So if I pull up Bed Bath & Beyond right now and say, okay, where are these July options, which is the July 17th expiration? They have now traded 13,000 of these. That's 1.3 million share equivalent. Now, when I did this trade, the calls, which again, it's a spread, folks. It's somebody buying the 11 calls, selling the 13.50 calls. That means they could make a maximum of $2.50. The differential between taking it from somebody at 11, letting somebody else take it from you at 13.50. That would be your max profit, $2.50. How much did they pay for it? Well, they paid $1.27. They collected 45. So you guys do the math. Let's say it's around 80 cents is what they paid for this, which is 80 bucks for each spread that could turn into 250 bucks, 80 bucks to 250. Like the odds. I like the potential return here. How's the trade been working out? Well, it's just below 11 right now, trading $10.85. All right, time to get into our third of our 3 at 3. You want to learn more about trading? Check out the multiple trades a day that we do on unusual activity, which would be marketrebellion.com/UOA. Or you could check out just one trade a day. Or you could check out just one trade a week. We have something, in other words, a subscription that fits every budget and every trading style. Bang! Pins or Pinterest. Let's check this one and see how we're doing. So Pinterest, P-I-N-S, you've heard us in this name before, many times before. Most of those times been winners. And this one's looking like it's going to be a winner too. How do I know? Well, look, 12,000 of the August 21 calls. So these are out into the future by about 5.5 weeks. Aug 21 is the strike price. That's where somebody has the right to take it from somebody. We saw 12,000 of these, which is 1.2 million share equivalent at, let's call it $2.50. So in other words, 1,200,000 shares worth at $2.50. So this is a big trade, folks. This is $2+ million worth of options that went off out of the money, just out of the money, because the stock was $20.90 and they're buying those 21 calls. Earnings estimated to be the 6th of August, so that would fall within this time frame for Pinterest. And the stock has been moving up nicely, as you see. Big drop last week, fell all the way down to that, basically broke down to 20. And since then, it's been moving back up, in particular today. After that gap lower, it's been moving up throughout the day, and we're near the highs of the day, but not at the highs, $21.85. So in other words, the trades that we put on under 21 are now basically $1 in the money. Bang! That's what I'm talking about. You want to know how those calls are working out? Well, those Aug 21 calls, so let's take a look. August 21 calls, they were about $2.50, we said. Well, right now, they have traded now 18,000 of these calls. Bang! And these calls are now trading $2.77. So you're up maybe 27 cents if you bought in for $2.50. They have traded already over $3 today. So I have not taken profits, but I have now started to sell calls against this into it. When I say that, what does that mean? That means that if I own these calls, I can sell any strike higher than 21 and it doesn't increase my margin even a little bit. So what I'm looking to do right now, folks, is sell calls at the higher strikes so that I can impact both volatility, Vega, and theta, time decay, which I talked with you guys about already. So given that, I am looking in here to sell the 22s, 23s, 24s in that range so that I can set myself up for some nice upside appreciation. Bang, that's it for our 3 at 3 today. If you'd like to learn more about it, check out marketrebellion.com/UOA. That is marketrebellion.com/UOA, which stands for Unusual Option Activity. I thank you for joining me. We're going to be doing a special sit down with Michael Bappas at 45 minutes from right now. So I got to get ready for that, which means I got to go. I hope you have a great day, folks, and I'll see you back here soon on Market Rebellion Television.